Hi everyone, welcome to Real Kadam podcast. Today our guest is Brian Shin, who's a co-founder at Business Canvas that owns Type, Recatch, and Founders as products. He is one of my friends from NYU Abu Dhabi, and he's one of the few people that I know who took a risk at young age and started his uh, own company and is doing that venture for over 4 years now. Brian, welcome to podcast.
Thank you so much. It's quite a grand opening. But yeah, thank you so much for the intro and really great to talk to you guys today.
Cool. Our podcast is called Real Kadam, which translates to real step from Kazakh. And the first question that we ask our guests is, what is real step that you have made that made you who you are right now? It's either a consistent number of steps that you have done or one concrete step that shaped your life.
Um, I think honestly, I think for me and usually for everyone, I think it's usually multiple steps to where I got today. But there are quite critical events in those steps that really shape your life to a certain direction. Um, like both of you over here and me also, I think we're like every individual is composed of what they experience in their childhood and their education and usually by influenced by people around them. It formulates the type of ideology and eventually it sets that direction of who you want to be in the end. But like what you said, it's a very interesting question because I never really thought about it that deeply. But I think me coming into entrepreneurship was more of an accident as opposed to like something that I wanted to be ever since I was younger. On the contrary, I actually wanted to. Initially, I thought life was super linear. I think it's same for you and Saddam. Like we guys like us, I think we try very hard in everything. We probably did our best in school, tried to go to the best school possible, meet cool people, and study hard, do well in exams. So I thought like when I do good in exams, I go to good school and get a good job, etc. And entrepreneurship actually for me it happened back in college at NYU. I've joined this competition called the Halt Prize. So Halt Prize is an entrepreneur is a student entrepreneurship competition hosted by the Halt College and Clinton Foundation. And initially, like me and a few friends thought it was gonna be fun. It eventually changed my life, but initially it started off as like a mini project that any student would do. I thought it was much closer to a pitching competition, so I thought it'd be fun. And we did some things right, and we won the school round because there's like a school round and a regional round and like a final round in New York actually. And when we actually won the school round, one of the panelists who was an angel investor came up to us. He said, like, how long will it take for you guys to build what you just pitched? And I think that was a very critical moment for me. I had never actually thought about building something. I thought it was like a pitching competition. All I could create was like a PowerPoint presentation, and there are like it's getting long-winded, but I guess there are moments like these that shape who I am and shape who everyone is. But I think many of these little steps eventually led me to those moments where I can make a decision to go on to actually build that thing, or maybe just decline it and be on track on whatever I was initially planning to. Yeah. So I think it's closer to a multitude of events.
Makes sense. We are actually going to talk about Halt Price and how you entered this journey a little later in the podcast. But I guess at this point, what I want to understand is, how are you in general thinking about exposing yourself to this kind of lucky accidents? Because I remember in university, you've also been doing a lot of interesting stuff, including hackathons and I know leading some of the clubs. I'm just curious, have you ever planned to do this kind of accidents? Yeah.
Very, very great question. I've actually talked about a very similar topic 2 days ago. So when I so like as a I'm by the way, I'm Korean. I was born in South Korea. Even although I moved away from South Korea at a young age, I do have the obligation to go to the military. I did for a year and a half back when I wasn't like 21, and I actually competed in a startup competition in the army as well, and some things went right. Me and my team, we won it, and then so I actually had the opportunity to talk to the next batch of people like 2 days ago, and my main topic was how to make luck, and I think it's the exact question that you just asked. Um, I think it's more of a recent phenomenon for me to consciously think about making luck happen by exposing myself to people like you guys. Like we don't know what's gonna happen like today, right? Maybe like us three in the future might start a company. I don't know, in like 10 years down the line because of this moments, right? But previously, back in college, back in high school, it wasn't a conscious thought, to be very honest. I think it was more because I thought it was fun. It was just very interesting, very joyful for me to start things, move things, and make things happen. So previously, it was more, I was just going after things that I thought was interesting. But now I'm consciously trying to make things happen like that. I think it's more of a accumulated learning that I realized by reflecting on my life. When did all of these interesting things happen? And I think many of those things happened when I exposed myself to potential opportunities of change, or yeah, change in general. So like what many entrepreneurs say, it might sound cliche, but I think even if like chances like these, I think 9 out of 10, exposing yourself to meetings like new meetings or networking parties or whatever, they'll probably go bad, but that one chance out of 10 makes the remaining nine worth it, I think. So now, just to answer your question directly, I do take conscious steps on making luck happen and to expose myself to chances that are unclear but of potential. Yeah.
How do you persist after some awkward networking event, or like, you essentially waste your time while going to this luck exposing place, whatever you call it, right? Because I assume a lot of people get discouraged and they're like, okay, this is the ninth time that I'm doing. I don't want to do the 10th time, but the 10th time is a lucky one. How do you ensure that you have this persistence inside?
Yeah, it's a very good question. So like the framework or the practice that I usually do is so I don't go without a goal. I think it's quite similar to everyone, but if there's no at least one person that I do not want to meet in that event or in that meeting, I usually don't go. If there's at least one person that I have a chance to talk to and to change his or her mind or to get a second meeting, then I go. And usually the interesting thing here is that so it's either one of two things or even both. If you achieve your goal of talking to that one person that you'd like to, good. But all the random events that happen in the process of getting to that person is also, you're basically exposing yourself to potential luck. So I do take that approach of being very conscious about where to go and what to do when I go. Before I didn't have any of this. I just thought it was stupid and fun, so I just joined and things happened. But now I think time is very limited, and I can't spend too much time on just networking. So yeah, usually I set quite a solid goal on what to achieve.
Mm. Makes sense. That's great. Thank you.
Yeah. Mhm. Yeah, let's talk a bit about your the company that you've co-founded, the Business Canvas. Can you tell us a bit more about like what do you do and which problem do you solve? And yeah.
Yeah, sure. So Business Canvas is we're a software company that aims to make work easy, efficient, and effective. So we started off like what Nurpi said in the beginning. We currently have three products under our company, but our main product is Recatch, which is a sales pipeline automation software. So what we aim to, so we started off with a product called Typed, which is a document collaboration software. What we really aim to be is a second brain for everyone, and we initially started off with a very smaller problem set, which was so me and all of my co-founders, we did have a short period of entrepreneurial experience before founding our company. And what we realized was that, so this was back in 2020. So our company was founded in 2020, July. What we realized back then was, especially here in Korea and really everywhere else around the world, from 2020 onwards, we felt a big rush or boom of people who wanted to found companies and build something of their own, whether that's a designer or a developer or a chef or a painter. So many of these people realized that once COVID hit, many of them lost their jobs, and they're like, I need a way to find my own company or my own product or anything like that, because they realized that getting hired or being an employee of a certain organization won't last. It's not a permanent thing. And so there was this whole there were a lot of people who wanted to start their own things, but they, despite their profession, it was very difficult for them to start a company because of their lack of knowledge and their inability, their lack of experience of writing business plans and proposals and pitch decks and etc. So we initially started off with a very small problem set of, hey, let's help these people, these potential entrepreneurs, of how to write a pitch deck, how to write a business plan. So it's quite embarrassing, but our first MVP was a Google Doc template. So like 4 of us, we made a Google Docs template on helping these potential founders on writing their first business proposals, which they can send out to investors or potential clients and etc., so that they can basically articulate their businesses better. So we started off there, and it went quite well. So like despite how flimsy that first product is, people really did see the value of that Google Doc template, and many of them did raise small amount of seed money or got their first clients by making their business proposals much solid than what they used to have. And then we went deeper. We realized that it wasn't just business proposals and pitch decks. It was also legal documents. It was also product requirement documents. It was also so many different type of documents. It was very difficult for them to write, but also to manage. And as their business became bigger, we realized that it's very difficult to find the right type of, basically documents are solid forms of knowledge, right? And what they have been, so it was more of an organic growth, but they have been telling us that it's quite difficult to find what they've already written. So we've kind of pivoted in that way of becoming that second brain and trying to build a document tool that relies more on the relationship between a document and another, as opposed to like a folder structure where you need to be fully consciously aware of which file is where in which directory. So yeah, we start off with Typed, and Typed as your second brain was a document collaboration tool in which your company can not only easily write documents, but also to easily find them based on the relationship of the context of each document. And so that was the first product. And our second product, so Founders and Recatch was born at the same time. And this, once again, was a very organic birth of products. So what happened was, within Typed, we realized that many people we were looking through the retention of each users, and we realized a very weird segment of people in which Type was meant for documents, as in like written documents, but many of them, so we've embedded Google Workspace into our product, and we've realized that many of them have been spending significant amount of time using Google Sheets. So we looked into that set of users, and we realized that many of them have been writing their financial statements and their financial projections within Typed, and have been attaching all the so basically a financial model for a company for these guys was a screenshot of their whole business, because it has the numbers for all their costs, all their profits, all their revenue, etc. Right? So we were like, okay, like there seems to be opportunity here. Let's talk to more users, and we realized that financial planning and projections was another area where people spend a lot of time in, but had a very difficult time making it well, because many of these founders or entrepreneurs, they don't have a background in finance, right? But many investors and many business partners were requiring them of financial projections, and they were having a hard time. So founders came out as like a vertical use case of Typed, of helping entrepreneurs and founders build their financial models. So we had Typed and founders, and initially we were serving B2C, so like individual founders and individual entrepreneurs. But this is more of a realistic issue. But we realized that our revenue growth wasn't that high, and our churn rate was a little bit higher than industry standards. And we were thinking, okay, how can we make our product more valuable so that we can basically increase our average revenue? And we realized that we got to shift towards B2B and make Typed into more of a company-wide tool as opposed to like a personal tool. So while we were doing that shift back in 2021, summer-ish, we were talking to a bunch of investors and partners in the Bay, and they were like, okay, yeah, you guys should convert to B2B and have a B2B funnel for this. And while we did that, we realized there are so many inefficiencies in sales. You guys, I believe you guys went through, know this better than I do, but it's hard to believe how mechanical and how inefficient the process of sending a cold email, trying to get a reply, setting up a meeting, actually doing the meeting, following up on the relevant files, maybe setting a second meeting and a third, and then to close that customer. It's it's so lengthy, and there are so many mechanical steps in between that, from our standpoint, we were basically SaaS makers, we were like, God, we can automate so many parts of this. This is so inefficient. And at one point, we were hiring interns, 2 interns who were just assigned to scheduling. So we were like, wow, this doesn't make sense, and this is not what a human being should do. Like, human beings should be doing much more creative work as opposed to repetitive mechanical work. Why don't we build an internal tool? So we initially built an internal tool kind of similar to Calendly, but it was more geared towards sales. It was a form. It was basically like a Google form plus Calendly, in a way that once an inbound lead comes in from a company, they type in their details, their name, their interest, their company size, and etc. And we qualify the customer based on the information that they've given us, and we route it to a specific person, Calendly or a scheduling link, and then a meeting is booked. So before Recatch, it takes a company and a potential user, say, like 2 weeks to book that first meetings. With Recatch now, it takes like 30 seconds. So initially, it was more of an internal tool. So once again, it's another organic growth story, but many of our friends and other companies in Korea were saying like, hey, could we try that out? We'd love to use it too. We went through your sales process and it was the smoothest thing that I've ever experienced. Could we try that as well? Like, it was funny because we're like we're interested in Type, because of course like they input their information about Type, but they're like, hey, like, we know Type is good, but like we'd like to try this as well. Like, we're not sure if that's for sale, but we'd love you to provide it to us. So we did. We provided to them, and we realized that this was another point of opportunity. So like, yeah, it became long-winded, but all 3 of these were more of an organic growth story. But on the fundamental basis of all is to really use software to make work efficient for companies around the world.
Hmm. Yeah, really great story. I'm wondering, is it fair to say that currently you are focusing more on the recache, like the second product that you mentioned, right? Because of the better revenue model that you have.
That's true. Yeah. So like typed and founders are we're leaving it as it is so that it can grow organically. But
Mhm.
Recatch as the product itself is much more sticky, and it has we internally we believe that it gives more value to our users, impact wise and also revenue wise. Yes, definitely, it's doing much better than the other two. So yeah, we're primarily focusing on Recache for now.
Makes sense. Brian, I'm kind of curious. In the storyline, you have talked about how you were looking at the usage of typed and then decided that you guys should take one of the vertical uh, customer segment um, and created founders, right? In general, what kind of pattern do you use to understand whether to build something very specific to a certain vertical? Because essentially, it also has a huge opportunity cost, right? Like you are not looking into other customer segments. And how do you even justify that founders is large enough segment for you to just go vertically there, invest so much so that you create one more product out of it?
Yeah, it's very difficult. I think many product builders and product managers and founders have a hard time with this. I mean, so do we. But so we did have an internal conversation of whether to just focus type more towards this use case or to build a separate product outside of it. And really, the framework that we use, that I mean, I personally use, is the core value proposition different? If yes, I think it should be a different product. If no, if there are overlaps in between, I think there's opportunity to develop it as a feature. But typed, in essence, was the role of typed was to become your second brain and to become a document collaboration tool. But founders, as opposed to typed, although there are overlaps, it's quite clear that it was more geared towards building that financial model, and the educational aspect of building that financial model and the utility aspect of typed, we internally we saw that as two different things. So we could have just developed more upon typed and its features to enable better creation of financial projections, but we realized that the context is quite different. And once we get a little deeper into it, the whole ICP, the ideal customer profile, for typed and founders seemed quite different. So that's why I think it's important to have a lot of small bets and to experiment quite rigorously and quite frequently. And if that test turns out wrong, you should structure it in a way that you can always fall back to your previous plan. But yeah, without those, even without those, I think the framework that we use is whether the core value proposition, once this product is built out to its full model, is that different or is it overlapping much more? Is a big framework that I use.
Makes sense. So your role right now is more on the product side, right?
That's correct. And I mean, initially we do everything, right? I mean, just like any startup, but right now it's more on the product side.
All right, makes sense. I guess my question right now on the products, you have three products, and two of them, as you said, are more in the maintenance mode. It's not as invested as Recatch. I'm kind of curious why not just deprecate these two products, given that when any product is in maintenance mode, it usually doesn't have a lot of new developments. Customer issues might become even bigger problem, right? And probably your concentration will also go from time to time away from Recatch because there will be some sort of fires in either of these products that are not as high price, right? Why did you choose to still keep them? Why not just deprecate and invest fully in Recatch?
Yeah, it's a so What's funny is that, so by the way, Business Canvas is, we're venture backed, and we have 14 investors on board. We've raised around 14 million US million dollars so far. And what's funny is that that question that you just asked is the most frequent question that we get every quarter. Like, why don't you just go? So you know what's interesting is some people like typed, some people like Recatch, some people like founders. They're like, so they're like, hey, you guys should go all in on typed, and they're like, oh, you guys should all in on Recatch. And right now, so like if it was like 3 months ago or like 6 months ago, I'd say we were giving equal amount of attention to all three. But now, like what you said, we are in that process of bringing them all together into Recatch and to gradually fade out typed and founders. So that's a big, it's a really big new update that we've recently just decided, like a few weeks or even a few days ago. But initially, just to answer your question, initially the reason why we were maintaining all three was we did have a bigger vision of bringing them all together at one point. So there was an ICP overlap in a sense that we were targeting other startups and other venture companies, and founders being positioned as the financial layer of managing their information, and typed being their document layer, and Recatch being their customer data. We wanted to actually benchmark this other company called Rippling. I think you guys are aware, who's really, I think their strategy of compound startup was quite interesting, and we did want to explore that idea, especially the fact that we have an advantage here in Korea locally, and as we wanted to expand throughout Asia, like Japan, etc. We wanted to explore that idea initially. So we've actually maintained all three products for quite a long time, over a year. But now we realize that the opportunity cost is actually quite high to do that. And yeah, like what you said, your piece, recently we've been trying to gradually fade out and slow down things on typed and founders, and to fully go on Recatch. Because this is, once again, this was another hypothesis that we had, which turned out to be false. So now we're trying to make those adjustments.
Mhm, mhm. I'm wondering, let's say you decided like business wise, like there is like let's say new area which it makes sense to go vertically and dive into because it will make your like more revenue, and from business wise it's better idea. But pivot is always like you might target different audience and like start and solve different problems, right? So I'm wondering, how do you agree on that from like team perspective? Because you initially were involved in one idea and maybe one mission, maybe mission changes, or like how do you agree on that within the team and also with investors? Like uh, maybe investors are more interested in like making money, right? But also as the team, you have like different sort of missions, right? In general.
Right. Yeah, it's actually really hard. So like it used to be easier. So like the process went, so initially when we were building typed, and then when we decided to try out founders or Recatch, it was more of an organic thing. And once again, it all ties back to doing a lot of small bets and small iterations. Is we never really wanted to build out a product. Like it was more of an experiment, and it worked. Sort of like, oh, we should try it a bit more, and it worked again. So it was more of an organic thing. So in terms of team alignment or team discussion, it actually went quite naturally. So like everyone was aware that it was working. So we're like, as long as it doesn't go against, or it doesn't go fully, it's as long as it's not detouring our main goal or our main mission of using software to make work easy and efficient. I think many of our team members were actually happy that we were trying out many of these experiments and ideas. But now I think it's a bit different. So back then we were like what, like 15, 20 people. So like we were much more flexible, and we didn't really have like positions per se. So like everyone was problem solvers basically, and Even if you're an engineer, you can of course come into discussion and have leadership on what you want to build. Even if you're a marketer, even if you're sales, you can do whatever you wanted. But now I think it's a bit different. Now that it's our team, our organization is more structured and geared towards maximizing the development and the sale of Recatch. Now I think it'll be very difficult to align everyone if we wanted to start a new thing, and I think it would need to be within this vertical of sales and sales tech, so that it can be a value add to Recatch. But yeah, previously it used to be much easier, because we had, I think it also aligns with how big that mission, how big of a mission statement you have, and whether these activities are aligned to your main mission and goal. Yeah.
Okay, nice. So we know that you're more on the product side in your company, and can you tell us like some key learnings that you had for yourself regarding building a great product for your customers?
Yeah. There are a lot. Let's see. First thing that comes into mind is I actually asked this question to a lot of, so I meet other entrepreneurs quite often, just because Recatch, we're basically targeting other startups. So when I meet new founders or like first time founders, I usually ask them the question. Let me actually ask you guys this too, because you guys are at Meta. What would you value more, 1,000 free users or one paid user? What would be your
I would
answer?
say thousand free users.
1,000 free? How would you interpiece? What would you go for?
I'll go for one paid user.
One paid user. Wow, you guys are not aligned in this, huh? So like, usually, so my initial thought, when I was building my first product too, I thought what Saddam thought too. I was like, wow, 1,000 free users. So of course, like this. Full disclosure, it matters by what type of product you're building, whether you're B2C, B2B, platform, etc. Of course, it matters, but more geared towards SaaS and B2B, I guess. 1,000 free users is great, but we realized that it was more of like a vanity metric as opposed to like one paid user who would give you some very critical feedback on how to develop your product into like an actual business. So on a business standpoint, of course, it matters by perspective, but on a business standpoint, I one of the key learnings that I had for the past 3 products was that getting that first paid customer or that first 10 paid customer is much more critical than getting like 10,000 free users on your platform. I think the type of learning and the density of learning that you can get from these people and these users are much more than free users or who may be just trying it out, who may be just researching your product and etc. So yeah, that's one of the biggest things that I try to keep in mind when I try to build out a new product or a new feature. And another thing that we learned was it seems quite obvious, but switching cost is very, very high, especially for SaaS. So what this means is SaaS products are usually they're utility products, right? They make parts of your life go better, easier, more efficient, or more smart. But no matter how stupid the current set of products may be, just because of a very small factor, let's say right now, let's say like on my Mac, I have a bunch of apps open. I have like Notion, I have TickTick for my own task management. I have PowerPoint. I have Cursor.ai for my code. I have SetApp open, which enables me to download multiple Mac apps. So like all these apps, you'd be surprised to realize how difficult it is for you to get a specific user out of that software that they've been using for the past year or two. And unless your product is really like 10 times better than the current one, switching cost, human beings, I think we're naturally programmed in a way that it's annoying, and it's people are too lazy to try out a new app and to migrate completely unless they find something miles better than the current one is another big lesson that I've realized. So unless you have a very fresh or a new edge to approaching the user, I think users really stick on to what they usually have. And the last lesson that I want to talk about was when we let's see how you can organize this. So wait, at Meta, the Nurbis, you're working at Threads, and Saddam. Oh, sorry, on the metaverse part? Is there a specific product that you're currently working on?
Yeah.
Just wanted to give
Horizon
an
events.
example. Yeah.
EVR events.
Sorry.
Horizon events.
Oh, Horizon events. I see. And you guys are both engineers, right?
Yeah.
Okay. So like usually when we have like a new product member or like a product manager who comes on board, we have this thing called the mom test. I think you guys might know this. Yeah, the mom test is a very big thing that we have. So whether you're an engineer or whether you're a designer or whether you're, of course, if you're a product manager, you must know this, but we make sure everyone knows what the mom test is. And for those listeners who may not know this, mom test is a test, especially when you're interviewing new potential customers or potential users about this specific product or value proposition that you're testing. And for example, let's say you're working on a product or you're starting a new company. If you ask whether this product is a great idea to your parents or especially your mom, because they love you, because she loves you, she'll probably say it's great. So like if you say like, hey, like, do you have a hard time brushing your teeth? They'll say like, yeah, like, oh yeah, it's very hard. Does your toothpaste like taste bad? They're like, yeah. So like it's a form of an interview in which you're directing a user on a specific direction, right? And the mom test is basically a test that enables or ensures that the set of questions that you have isn't directing a user in a certain way. So it's a little bit different to asking only open-ended questions, but to formulating your questions well so that you can bring out the truth from what the user is going through. And we, as a person who's not only validating questions on an individual level, but as a team level, we make sure that all makers within our organization talk to users as often as possible. So we have this internal rule within our company that says if you didn't talk to 3 users this week, you haven't gotten anything done this week. So like all engineers or all designers they must talk to at least 3 customers per week, so that they don't lose sense on what they're building, who they're building it for, and what type of problems that they're facing. Yeah.
How do you make that possible for all the employees, right, on the product side? Because it's for like business owner, it's hard to maintain. Or do you require it for like for employees to talk to anyone like outside, like not necessarily current customers?
Yeah, so like of course we on a company level we try to ensure that they have easy access to all of these meetings. So on a weekly level, our sales team each salesperson they have at least like 3 to 4 meetings per day. So like in a week they have like 15 to 20 meetings, and our customer success team also constantly book feedback meetings on a daily level. So and all of these calendars are open to all developers and designers and PMs. So it's really more of them picking which to join and which to listen into and which to participate in, as opposed to them actively searching for customers to talk to. So like as a company we open up opportunities for them to talk to customers as often as possible.
Makes sense. Brian, let's shift gears a little bit and talk more about the numbers, the markets that you're targeting. The first question that we have is, are you still targeting mainly users in Korea, or are you expanding right now? How did you come up with which market to target? Is it just because you guys are based in Korea and are majority Korean employees, right? Yeah.
Yeah, so like as of now, until the end of this year, our plan is to fully focus in Korea. So like things were different for Typed, for Founders, and Recatch, but now talk about Recatch only. For this year, we'll be fully focused on Korea, and I think that's because of two things. Number one, we feel like we have a stronger moat here as opposed to anywhere else in the world because the amount of branding equity that we have here and the amount of business network that we have here gets us to places that would be difficult in other countries. So we would really like to have a stronger financial and a financial foundation here in Korea first before expanding outside. But if we do expand outside, I think the two primary countries that we would like to tap into would be the US and Japan. And the reason why it's these two countries and the reason why we want to stay in Korea first is because as a sales tech product or as a CRM, one very interesting thing about the CRM market in Korea is that surprisingly it has just begun to grow, and it's more of a cultural thing. So what's surprising is that Salesforce is like, what's their valuation recently? It's like 200 billion, I think, recently. Their biggest market is of course the US, and their second biggest market is Japan. And usually for larger enterprise software, whether that's like IBM or Oracle or like anything really, when these huge companies set sales quotas or revenue quotas for countries around the world, usually if Japan is 10, they set Korea as like 1 or 2. So like that's the amount of market share that they believe that they can take from Korea. But what's interesting between for CRM is that despite the fact that Japan is the second biggest market for Salesforce, Salesforce Korea, their revenue last year was around 20 million, which is like less than 1% of what they're making in Japan. And the reason why this is happening was because in Korea there's a culture of larger companies, let's say like companies like Samsung or companies like LG, they don't really use SaaS. They build their own. They're like, oh guys, we need a new team chat tool, and as opposed to just using Slack or like Teams, they used to just build their own. And I think this is because of two things. Because 10-15 years ago, the cost of labor is quite cheap, and there were a lot of smart engineers, so they just hire them, give them 3 months, and just build a tool so that they don't need to pay for subscriptions every month, and they have a tool that they liked already. So, but that's changing because the cost of labor is growing significantly in Korea, and it's getting much more expensive. And also the government is quite actively pushing agendas regarding cloud adoption and SaaS adoption. So like for the past like 2-3 years, it has been surprisingly slow, but SaaS adoptions have been growing, and especially on the CRM side, we believe market size itself is growing quite rapidly. So we would like to capture that opportunity while we're here, and then once we have that strong foothold here, we'd like to expand to places like Japan and the US, where the CRM market itself is huge, but we also have opportunity as a new incumbent into the market. Yeah.
Makes sense. What is the highest cap that you can achieve in Korea alone? I actually don't know how big is Korea's market.
So like in terms of sales or like CRM, so like let's speak in terms of like, let's say like startup investments, for example, the VC market. Within Asia, Korea would be top 3. It's very big. In terms of, let's say, just CRM market or sales tech market, I'd say right now, like 2024 wise, it's like it's around like, let's say like 1% of what the US has. But like all these reasons is it ties back to that whole culture of just building their own stuff. And so the market wasn't really open because no matter how low you price your CRM or your product, they didn't. The bigger company, enterprise and mid market companies didn't even consider that option before, and now they are. So it's growing much further. So the rate of growth, despite the size differences from here and the US, I think the rate of growth would be at least 3-4 times of what the US is experiencing for here in Korea.
Do you see your customers using in order to sell for US or Japan?
Sorry, I didn't get the question.
So you are like more like CRM tool, right? And a lot of salespeople in different startups or big companies use it. Do you see your tool being used in order to manage sales with the US or Japan counterparts?
Oh, yeah, that's definitely possible. So like that's actually one of our biggest sales strategy for targeting enterprise companies. So of course it's very difficult to land an enterprise deal that's composed of like thousands of users in one go. So like one of our biggest strategies is we take a modular approach to what we provide within our product. So we have this thing called the inbound router, which is just for your inbound part, and you have the deal pipeline, which is like your main CRM, and you have scheduling, and there's many different parts. So one of our biggest strategies right now in targeting enterprise and mid market is get just one module of what we have in Recatch and make just one team use it very well. And once that team is activated and have high retention, as a salesperson, we have like the best weapon basically to go up to the CEO or go up to the decision maker and say like, hey, your team is actually getting so much value out of this. Why don't we do this for a second team and a third team and a fourth team until we get the whole company? And recently we've been targeting. So like even within a larger organization, there are teams, like each team have a very different work culture, right? I bet like Threads and like the Metaverse team have very different cultures. So some teams are very open to using new tools, and some teams are very they're very quite traditional on how they approach using new products. So like we try to target teams that are open to using new tools, and surprisingly teams who are in charge of like global sales or foreign sales like Japan or US are very open to using these tools. So it's one of the strategies that we're using to land and expand within an enterprise.
That's nice. So you're getting a preview of potentially
Yeah,
salespeople in the US and Japan.
exactly.
One of the last updates that you have done in terms of numbers in one of the podcasts that we have watched, or actually interviews on EO, was that you have raised $5.5 million. And just now you said that you have raised over 14 million, if I'm not mistaken. Can you, in general, talk about the numbers in business in terms of investments, revenue, and profits? How are you, in general, thinking about, oh, this is the right time to raise rather than be self-fund the next steps of the company?
Yeah. So the approach that we took for this company, for Business Canvas, of course, there are many options to go about how you strategize your fundraising strategy. But for Business Canvas, we raised our. It's surprisingly we raised our seed basically like 3 weeks of founding, and we did that because so like I think this actually ties back to my first company, which I founded back in NYU. We were very actually tight on money for that first company, so we had to, like, each of the founders, we had to actually pay with their own money at some point. I had to pay employees like on our own pockets and etc. So we realized that despite how much you want to bootstrap and how much you want to like own a larger chunk of your equity, that financial strain on individual is actually quite critical on not only on the financial side, but as like the stress levels and everything. We realize that it's quite unhealthy. So we made sure we get the right partner or the right investor on board early on. So seed funding, pre-seed was like that. It wasn't that big of a check. I think it was like 200K. It was part of this accelerator. We raised our first fund, and we were just like four people within the team. So that was good. But from that point on, I think it's a very I think our strategy may not be valid for other companies, but the strategy that we took on was very particular to the environment that we were in. So you know how so we were founded in 2020, and 2021 was when all of this quantitative easing and money was flowing in the market, and basically we were printing money, right? There was like COVID relief funds and stuff like that. So it was more of a macro decision as opposed to whether we needed the money right now or not. So like let's put it like this. So me and my co-founders were basically like geeks in terms of like watching market movements and where the money is flowing and stuff like that. So we did kind of realize that there was too much liquidity flowing into the market in 2021, that 2022 and 2023, we were scared that like this would cause problems, and you know how it caused problems for like I don't know like SVB and all that. So we actually went on the path of raising a lot of money early on, as opposed to raising the amount that we needed each time, because we realized that despite our efforts or despite how great we were, if the markets are bad, nobody would look at us. So back in 2021 and early 2022, we intentionally went for a fundraising round, even if we didn't really need it, because the amount of convincing needed for investors was much less than what is needed like now, and the valuation multiples, especially for SaaS, was freaking crazy back then. So right now, let's say for investments, it really matters by like what you're building. Like if it's like AI, it's still crazy, but let's say like a standard SaaS valuation multiple for private rounds would be, let's say like 7 times your ARR, or like 10 times if you can get it well. When the market was bad, it went down to like 5 times your revenue multiple. But back in 2021, they would go for like 20x or like 25x. So it was a time that was much more founder friendly, and we realized this isn't the party that's gonna last for like 5 years. So like we took that path of raising earlier on, as opposed to getting the money whenever we needed it.
Oh, that's so smart. You essentially timed it right. But I assume you've raised afterwards too, right? Because as you said, the total investments is 14 million. Why have you raised later? And what do you actually use all of this investment money?
So like any other software company, I'd say like 70% of our cost is basically just salaries for our teams. The remaining 30 is like our office and like food and stuff like that. Our servers and dev related stuff aren't too huge yet, so that's good. So our money is usually on making our team much more productive and happy, and it's used for their well-being. I think that's the biggest part of our chunk. If our latest round was in early 2023, so it was like late 2022. So this again is another interesting story. So like when we were raising a lot of money back in 2021, we had the chance to raise from a family office, so which is quite unconventional than what a lot of startups take. They take it from like famous accelerators, or famous basically like investors, right, or like angels. But there was this new VC who wanted to invest in us in Korea, and it was like an upcoming VC. So like they weren't even they didn't even have a license yet. They're like, hey, like we were looking at the SaaS scene in Korea. We we went through like hundreds of deals, and there's only two companies, and like one of them is you. And we're like, oh, cool. So like, let's talk. Like we're like, but like our license is coming in like three months, and we were raising at that point. So what that VC did was, that person actually introduced us to one of their LPs, um, uh, and that person and that family office was quite open to supporting they were very in line in where our company was going, and like on a personal level, they really loved our team and the vision that we had. So the initial sum of money was more geared towards that, but when we raised in 2023, um, this was when things were very unclear. We were pivoting towards focusing on more on recatch as opposed to like typed and founders, and this round was solely led by that family office, because like at this time, all of the institutional investors, they were closing doors on new deals, and even on follow-on deals, like they weren't open because markets were really bad. But I mean, family office, like they're up to, it's their own money, right? So like they were really up to using their own. It's really up to their own decision on whether to invest in us or not. So we realized that to get through this uncertainty, our burn rate was like we did have enough, but we wanted to be sure that we could get through this pivot towards recatch much more safely. So we raised that round in 2023.
Mhm. Mhm. Yeah, we also want to talk about the founders match. So in one of the previous interviews, you mentioned that compared to previous company in this company that you've co-founded, you found like the better match. And can you tell a bit more about that? Like, what do you think you would need to talk about prior starting something together? What do you need to align on, and yeah, and how it happened for your case?
Yeah. So like to be very honest, I think many things, you need to be lucky. But once again, like what we talked about initially, there are ways to make luck, right? To expose yourself to all these potential opportunities and stuff like that. But I think back then when I founded my first company at school, um, I didn't know how to work sustainably. And what this means is like basically at certain point of our first company, when I founded that company with my college mates, we were like taking turns sleeping at some point, because like we were just driven by just pure passion and like drive. They're like we took turns like sleeping and programming and taking meetings and pitching and stuff like that. So mentally everyone was unhealthy. Financially everyone was burning their own cash. So I think we overdid ourselves really, and I don't think it's really a fault of one person or another, but it was just all of us very young, driven young men who wanted to make something happen, and it led to some unsustainable decisions. So when I was founding my second company, which is Business Canvas, I met all of my co-founders at when we were working at another startup. So this funny enough, I was actually an intern there, but I met all my co-founders there, and I worked with them for like at least like 4 or 5 months, and did understand like what they value, what they don't value, like how they are, what their personalities are like. So I think it's very important for you to like vet these people before you move on to starting a company, because starting a company or a venture is a very big decision. So like no matter how small it may seem in the beginning, I'd like to tell everyone that it's at least like a like a 5 year commitment for your life. So I think it's very important to know who you're working with, because it's not only work, you basically almost live with them. Like these people who you found your companies with, these people are who you're going to see the most, I think, for the next like 3 years or the next 5 years really. So make sure that these people are not only competent or skillful, but make sure that you enjoy just being with them and talking to them, and having I don't know, like you should be quite comfortable in talking honestly with these people, and even almost as a friend, really. So those are some things that I really uh, took into priority when I was founding Business Canvas, because these were things that I didn't realize when I was founding my first company. And I think the same applies to hiring. I think it's the same thing, really. Finding your co-founders and hiring your first few members, or your employees. I think it's the same thing. Whether, of course, there are basic things that these guys need to meet, like their basic skills and their cultural fit. But on a personal level, like, are these people just good people in general? And honest people in general are some important things that I think I took into account.
What's a question, or how do you know whether someone is good or honest person?
It's tough, like, I don't think I get things right every single time. I that's why I say it's luck, because they might turn out bad, right? Or they could have been good, but they might become bad. So, like, it's really luck. But, like, I don't want to say this, but at certain times it's more about intuition. And why I say this is, how I approach intuition is, I think intuition is like a culmination of all of your experiences and your knowledge that you had in the past, compacted down into a certain set of decision making mechanisms in your brain. It's not the best to just trust just your intuition. Of course, you should have a set of questions. We try to ask the right set of questions. We try to dig deeper into what kind of life that person have or has lived. We can do this now because we're in a position of hiring. But in terms of co-founders, I think the only way is to hang out with them as much as possible, and try to learn as much about so, like, what they did in the past may not matter as much as how they like reacted to certain, like the events itself don't really matter that much, but how they are interpreting and how they are accepting these events in the past, and that mindset that they have, I think it matters most. So there is no silver bullet, really. You might get the worst co-founder ever, but yeah, I think just hanging out with them gives you a little sense of who they are.
Would you say over time with your current co-founders you became a closer friend, or the reverse, you started as a friend and then more and more the relationship is becoming rigid, and to ensure that you are operating more effectively in the company rather than looking at each other as friends and giving leeways to do work in a suboptimal way?
I think friendship wise, of course, just like any other, like, human beings, we spent so much time together. We spent a lot of hard times together as well. So I think the bond itself is becoming much stronger. But how we treat each other, I think it's much more professional now as opposed to how it was back then. Before, like, we were just like scrummy with like 4 or 5 people. It was like almost like a school project, right? Like, just trying to make something, build something. But now we have our own positions, we have our own set of responsibilities, so it's much more professional. But, like, I think we have a mutual understanding that deep down, like, we're doing this not because like we are like this, but because it's needed. It's out of necessity, out of the need, so that the company operates more as it's supposed to. So I think as long as there's that mutual understanding that you guys or you two have amongst your co-founders, I think it's okay. And once this journey comes to an end, whether it's a good ending or a bad ending, I think we will still remain as good friends. But yeah, I think it's really important for you guys, like, or those set of co-founders, to understand that, at times you need to argue, you need to have a conflict, because, like, you're in charge of this and he's in charge of that and she's in charge of this. You might get into a conflict, but just having that mutual agreement or understanding that it's all for a good cause, and for that common cause of what you guys agreed to, which was for the success of the company, I think it's fine as long as we all understand it. Like, understand that it's not personal. It's for the good of the company. As long as those set of principles, I'd say, is set, I think the relationship shouldn't be impacted.
I'm wondering which is primary language for your company when you hire? Is it like English or Korean? And how common is in Korea
Yeah,
for
so like
startups?
it's Korean for now. It's
Mm.
actually in the earlier days when so like it's funny because like we as a new startup, it's very hard to hire um because like you're nobody and nobody wants to come to a nobody. So it's very hard. So initially me and my co-founders we've hired a lot of our friends. So like still like in my company my friend from elementary school. He's still there for like 4 years now, and like he brought his friends, and his friends brought his friends. So like this is how we hired initially. I think it's quite similar to many earlier startups. So especially in the earlier days because I brought a lot of my friends in. There are a lot of native English speakers, so we did speak English a lot. But now, like as we hired more local talent, Korean is like the primary language.
Brian, I guess moving away from the recatch and business canvas, what motivates you? What makes you wake up and do the stuff that you're doing consistently, go in the entrepreneurship route? I know you would have been successful in any setting, including corporate setting. Why are you choosing um, your entrepreneurship journey?
I've actually recently tried to think about what values I value most, and after much thought, there are so many values that are very important, but I think it's freedom that I think is very important, um, and also freedom has multiple layers. So I try to really think deep into this. So I've concluded with four primary type of freedoms that I think is very valuable. Number one is the freedom of time, and what this means is you are free to use your time to see how to use it how you see fit. So I think entrepreneurship gives a lot of room for you to use your time in a way that you can maximize the amount of anything, whether that's joy or value or really anything. So I think the freedom of time is very important for me. And number two is the freedom of thought. Of course, this can be guaranteed in a lot of workspaces, but I think especially as an entrepreneur or as a person who likes to build something of his or her own, I think the freedom of thinking and testing things that you think is right, which may turn out to be wrong. I think that whole process itself is very valuable for me. So that's the second thing. And the third freedom is freedom of like location wise, like place. Now it's very different. I feel like many jobs offer remote locations and remote working, but being at a place where you think it's important is another type of freedom that I think is of value to me. Um, and lastly is the freedom of it's quite tied to thought, but like speaking your thoughts without any worry of judgment or things like that is very important for me. And I think as an entrepreneur, it's very easy because you and your friends started out this thing. It's very easy for you guys to set the whole culture of the company in a way that we value like radical candor and radical honesty and things like that, so that you can speak whatever idea and it's not judged and it's rather discussed upon, and you might be wrong, but that doesn't matter to speak about this. So I think like all of this coming together under the umbrella of freedom, I think entrepreneur is a great medium, I think, to put these into practice. That's the first biggest thing. And the second thing is, I think I kind of mentioned this in EO and stuff like that, but I think what I can do best, like um, I I know for a fact that there are so many. Let's say I think I've mentioned this in another one too, but let's say I wanna save people's lives. Um, I know that there are so many people who are much skilled and much smarter than I am as doctors and as physicians than I am. And let's say even for software, I know that like Unirpies and use to them, like even if I never met you in real life, you guys, I know for a fact that are much smarter than I am in terms of building things and engineering and software development and things like that. So so what can I do in this position? And what I thought was what I enjoy doing and what I think is more valuable of me would be to bring people like that together so that we can basically make a bigger impact of what we could have done on an individual level. And I think the size of impact that I make is just fun to me to make sizable impact and sizable value. So I thought it'll be better for me to position myself as a person that orchestrates this all these things as opposed to me just trying to solve that problem on my own. So yeah, I think these two are the biggest things.
Talking about your values and what you can do the best, is Business Canvas the only place right now that you are doing that? Or are you trying to do something outside of it? Of course, I guess it's best as a co-founder to spend all your energy in the company you have found. But I'm curious, are you type of entrepreneur whose whole identity becomes the company that they're building right now, or are you trying to venture a little outside of it?
Um, so like right now, so like basically I spend actually I don't even know how many hours, but like significant amount of hours for Business Canvas. Um, I usually come to work at like 9 or 10 a.m. and I leave office at like say like 1 a.m. or 2 a.m. Um, and I go in the weekends too. So right now I'm fully focused on this, but like me and my co-founders, we already understand that this is just a stepping stone into our entrepreneurial journey later on. So yeah, I think it's just one step in my life as an entrepreneur, as opposed to this being my end all be all type of thing. So it's a step, and we would really like to have this as like a very big learning opportunity and a decent amount of success as we move on into our next things in the future. So yeah, I think that's how we're taking it right now. And on a personal level, I've been actually doing some like angel investing and some like product acquisitions on my own for me to. I think it's for pure joy also. Like I just like to support these entrepreneurs and these products, and I love using them too. So yeah, I think it's for your question. I think it's more of the latter. Actually, I forget which is which, but it's not really just tied down to this one company. But I think this is more of a stepping stone.
Mm, makes sense. If you have this attitude of, oh, this company is a stepping stone, don't you think you will do suboptimal work? You would always be like, oh, okay, worst case scenario is just a learning experience. Let me just fuck around, I'll just go and do some other stuff. Of course, I learned here, but is it even fair towards your employees knowing that for co-founder, this is not be all. This is not like, for Mark, it can be Facebook, right? It was his all thing. I'm sure that could also like have this energy of like, oh, it's everyone is all in, and it's not just like, oh, in the worst case scenario we'll just leave and we'll just start something new.
Mm. Yeah, I completely understand, and I think that's that. Once again, this ties back to like this culture of radical candor within our company. So like everyone knows that like this isn't the end all be all for everyone within the company, and I think that's fine. So I think because that sense, that notion is already widespread within the company. So like we actually are. So one of the biggest benchmarks that we like to have, if we're successful, is the PayPal mafia. I think we talk about that a lot within our company. Of course, PayPal is a very great company, but eventually it became a very important stepping stone for all of these members who became important founders, right? So I think we're taking that approach. So I don't think in terms of motivation or people's drive, it really impacts them. It rather we I think it's more of a better driver because we have this sense of urgency that this won't last forever. So everyone knows that we need to do good fast, because if this was like end all be all, we could say like, hey, it's fine. Like we have like 20 years. Like so like why should we do it now? So like people know that we should be making success. I mean, what success means per person, we should make that happen within the span of like, let's say like 5 years or like 3 years. So I think it's actually rather creating a good sense of motivation for everyone within the company.
You mentioned the value of freedom a few times before, and I was like wondering, to start something on your own, um, it's like the whole like in our countries it's a bit different than, for example, on the West, right? Like the cultural sort of vision is that everyone should study, and like most people go into academics and like to do successful there. And I would say it's less about the freedom. Usually, it's more about being successful and in your own like expertise. And also, it ties to the question of to what we discussed initially, that you left university to start something on your own. Can you tell a bit how was it for yourself? How did you come to this like love and value of the freedom compared to how it's generally in the Asian countries? Um, kind of, yeah.
Yeah, I mean, I think like I'm not really sure how the culture is like for you guys, but for Korea, especially in East Asia, we're quite known for, like a very strict, and like all these Asian parents. Um,
Mhm.
thankfully, my parents were really supportive of whatever I do, so I think that really impacted me a lot. Um, uh, but so like on a societal level, like people did see me very weirdly. They're like wow, like this guy is stupid. Like he's reckless. He's giving up on school for this little thing. It happened quite often. I think many people were like, you're crazy. You should go back to school right now, and you could do it anytime. And um, I think as long as the closest people that you have around you don't have this mindset, I think it doesn't bother you as much, because to be very honest, like those people who are very far from me, their opinions and feedback um, don't really matter too much to me, I think. And that's why I think, like how no matter how cliche it is, they're like, oh, like it's very important to have good people around you, and you are the average of the five closest people around you. I think it's very true in that sense. And average not only in terms of like skill or like intellect, but also in terms of like mindset and the ideologies that you have. I think human beings are very vulnerable to the thoughts and the words of whoever's around them. So I think it's very important for you to like consciously pick or choose who to have around you. So yeah, I think my family and my friends have impacted this a lot. And back in NYU, this wasn't really encouraged. I feel like many of us, like I feel like majority of us go to grad school, and then take relatively the safe way, as opposed to entrepreneurship. But once again, I think the closest people around me, like friends, I think because I was in computer science and many people wanted to build their own things and they had fun building their own things, I think it was okay for me.
Hmm. Hmm. And also I'm wondering, how does this cultural thinking impact the like startup industry in general in Korea? Because if people tend to go more into this like academics, um, does it affect like much, and how maybe government tries to reverse that to make more like to create more startups, to create more VCs and stuff?
Yeah. So, okay. Yeah, that's very important. So, for Korea, um, I think the government is doing a very important job in encouraging people and younger people to try out and build something on their own, because the government grant programs are very great here. One of the biggest reasons why. So initially, in our early days, we wanted to actually incorporate our headquarters in the U.S., but the reason why we stayed here is because of such great grants that the government is giving for startups and founders here. So, like monetary wise, the government is pushing this agenda a lot. I think it's also because Korea is a country that grew upon so we're a very small country. Like we don't have natural resources, we don't have anything, but the only thing we have is people. And it's very important for the Korean government to encourage people to build companies, um, maybe like although like to become companies like Samsung or LG or Hyundai and things like that is the only way for our small country to grow. So I think the government is doing a very
Mm.
important and actually a good job on pushing younger people to try out these things.
Mm, makes sense. We're moving closer to the end of this podcast, Brian, and I wanted to ask, what are some piece of uh, tr- advice you would give for uh, our peers, younger generation in general, who are trying to do entrepreneurship? Even, for instance, myself at NYUAD, who was also a CS major, and I was like, oh, I really want to do my own thing, but I was very afraid to do it. Like deep down, I really wanted to do it, but I was really scared. And if you look at our classmates, you might be one of the few people who actually went ahead and started, even if everyone took the same classes, everyone did the same thing. How would you? What kind of advice would you give to for people who are afraid to take this leap of faith?
Um, s- it's okay. So it might be quite paradoxical, but I think okay. So like the biggest thing that I would tell that I actually do tell, because like a lot of these college students come up to me and ask a lot of these questions about entrepreneurship. The biggest thing I always say is to take a lot of small bets, um, and of course to take a lot of small bets, whether you're at school, whether you're at work, is of course you have to work double time than an ordinary average person, but take a lot of small bets until it works. And this once again ties back to making luck. So making luck doesn't just come out of meeting people, but you as an engineer, you as a maker, you as a builder, you just need to get it right once. I feel like you don't need two, three successes. You can have really, literally 99 failures, and that just one success, that one product market fit, that one product will get you on your own and to sustain yourself to degrees that you really couldn't imagine. So I think it's really important for you to take a lot of small bets while you're at school, while you're at really anywhere, if you have the skill and time. I think that's the biggest thing. And in terms of leap of faith, I think that faith naturally is built when things work. So I think, to be on the contrary, I think it's quite stupid to take that leap of faith when nothing's working, and it's just you and your drive. Sometimes it's okay. I think Many people do that, and that's okay, as long as you are ready to take on the risk and the downsides of what might happen to you, of you losing your, I don't know, like career or like monetary wise and health wise. If you're ready to take that on, I think it's completely fine, because I mean, in the end of the day, it's your life, right? But I think that leap of faith, sometimes it doesn't even need to be a leap when that faith is already strongly created. So what I tell a lot of younger people is, let go of that like grandiose dream of becoming like the next Mark, or the next whoever they're looking after, but really focused on what's fundamentally important, which is validating whether what you're building works or not. Even Mark, I feel like he jumped ship when things were working right. Like Facebook worked in the early days. If it didn't work, I don't think all of this would have happened, right? So always start small. It's many of that cliche things already that's on the internet. I think Paul Graham from YC do a lot of these blogs, do things that don't scale, build what users love. All of these sound cliche, but they're really the truth. So that's what I really would like to tell all these younger potential entrepreneurs. I feel like doing a lot of small projects and releasing them to market and to people is your way of making luck and building that faith. That will be like the foundational layer once you become an entrepreneur. So the stupidest thing is like, oh, like if I launch, people would copy. Like, like bluntly, like no one cares about you. Seriously, no one knows who you are. Even if you release your small little app, no one cares. And I mean that in a good way. And all that matters is 99% execution. It's just 1% idea. So release often, release many different things, and see what sticks. If it sticks, that leap is easily made.
Mhm. You also mentioned a couple of great resources already today, like Radical Candor, Momtest, also Program. Can you share like top maybe three resources, maybe podcast, book, etc., that you really, really love and you feel like you pull it into your life? Yeah.
Um, there are so many, but one of my favorite
Mhm.
books is which is the author of Radical Candor too, but is Ray Dalio's Principles. I think many people read this. Um, I think it's a very interesting approach to life, and I think it's a very smart way to live life and to make as little mistakes as possible, and to reduce risk in general for your life. So I would really highly recommend people to. You don't actually really need to read the whole thing, I think, and just grasp the concept of making principles in your own life, so that you don't make that stupid mistake twice. I think is very important. That's number one. Number two is I really respect the words and thoughts of Naval Ravikant a lot, and there are a lot of famous threads that he have, such as like how to get rich without getting lucky, and many of his quotes on Twitter. There is a book. Someone organized this all of his tweets and words into a book. Let me actually search that up. Naval Ravikant book. Yeah, it was. Oh yeah, it's called the Almanac of Naval Ravikant. I think you guys know this already. It was organized by this person called Eric and Jack. Let me just send it over to you guys. I think this book kind of, you don't need to go through Twitter and look through all of them. It's all in this book. His most recent ones are on Twitter, but I think this one is good. So I think people should. It's like a Twitter thread, so it's very easy to read. I really like that. And lastly, there are a lot of great ones, but of course, I think it's down to the classic of Paul Graham's essays in his blog, and I think especially as like a new startup, as a new founder, many of his words are not only the truth, but it will resonate with you down the line. So make sure you read them and understand them. Yeah, I think these are the top three.
Great, thanks.
Thank you very much, Brian. It was a great pleasure to be talking to you. I'm sure that our readers will also, I mean, not readers, our viewers will also love this episode. Thank you very much, Brian.
Yeah, I mean, thank you so much for inviting me, and hope to see you guys face to face soon.
Yeah. And good luck on your adventure and mission.
Yeah, thanks a lot, man. Hope to see you soon. Thanks.